Could rising living costs and volatile crypto markets spell disaster? Dive into expert analyses, revealing the hidden dangers in our economy. Discover surprising insights on consumer confidence, Bitcoin's fate, and real estate risks. Don't miss out. Your financial future is at stake. Today, on Financial News and Review, we will summarize the following videos. From Adam Taggart, Thoughtful Money, we have Too High Cost of Living is Destroying Consumer Confidence, Joanne. From Blockworks Macro, we have Altcoins going to zero and Bitcoin headed to the moon, Jonah van Bourg on crypto and oil. From David Lin, we have Will Cost of Living Crisis Get Worse? Why Consumers Are Getting Squeezed, Tomas Philipson. From David Lin, we have Repeat of 2008 Financial Crisis as Wave of Foreclosures Coming, Chris Vermeulen. From the Julia Roche Show, we have Central Banks Are Playing a Dangerous Game, Peter Boockvar. In this illuminating episode of Thoughtful Money, hosted by Adam Taggart, we're diving deep into the psyche of American consumers amid rising living costs. Our special guest is Joanne, the esteemed director of the University of Michigan's Consumer Sentiment Survey. Joanne brings a treasure trove of insights on consumer confidence and the factors that shape it, stemming from years of rigorous research. The crux of this discussion focuses on the stark reality faced by American consumers who, despite positive macroeconomic indicators like strong labor markets and increasing GDP, feel burdened by the soaring cost of living. Sheds light on how this discrepancy affects consumer confidence and financial prospects, ultimately questioning the sustainability of the so-called strong consumer narrative promoted by politicians and media headlines. Here are the key points discussed by Joanne. Consumer confidence. Despite solid labor markets and growing GDP, consumers feel weighed down by high prices and aren't thriving. Consumer sentiment remains below the historical average since 1978 and is only 30% above the trough of mid-2022. Wealth inequality. Economic benefits aren't distributed equally across the population, leading to increasing wealth inequality. While upper-income groups are less affected by high prices, middle and lower-income groups continue to struggle. Labor market dynamics. Consumers feel uncertain despite favorable labor market statistics. The perception is that unemployment might be heading in the wrong direction, increasing employment anxiety. Changing survey methodology. The survey is transitioning from phone to web interviews to enhance data collection and improve response accuracy. Early research shows this shift doesn't significantly impact the integrity of long-term data trends. Joanne made the following predictions: economic volatility and consumer spending. With increasing wealth inequality, economic volatility is expected to rise, affecting consumer spending, especially among middle and lower income groups. Strong labor markets are crucial to maintaining current consumer spending levels. Any deterioration could exacerbate spending decline. Bumpy times ahead. Election-related uncertainty and other macroeconomic factors suggest that consumers can expect volatile times within the next year. Joanne underscores the ongoing struggle faced by consumers due to high living costs and widening wealth gaps. Despite strong labor markets, the growing economic divide threatens the stability of consumer spending. Suggests focusing on policies to manage higher education costs and address the childcare crisis as pivotal steps toward mitigating wealth inequality. To stay abreast of consumer sentiment trends, she encourages listeners to follow the University of Michigan's survey updates. In this highly insightful episode of Blockworks Macro, the channel brings forward the expertise of Jonah van Bourg, a macro trader with extensive experience in trading commodities, volatility, and cryptocurrencies at the highest levels. The core thesis revolves around the future of cryptocurrencies, particularly how Bitcoin could ascend to significant financial relevance, juxtaposed against the downfall of most altcoins. Additionally, Jonah elaborates on crude oil markets and the future landscape of global commodities trading, with a focus on the systemic forces shaping these domains. Here are the key points discussed by Jonah van Bourg: Bitcoin and its commodity-like nature. Jonah explains how Bitcoin resembles a commodity, comparing its microstructure to crude oil, which needs refining to become useful. Despite short-term volatility, or CHOP, he maintains a highly bullish stance on Bitcoin for the medium to long term. Market dynamics and elements impacting Bitcoin. He suggests Bitcoin's price will experience a range-bound chop due to the lack of new money catalysts in the short term. Key events like ETF implementations and Mt. Gox Bitcoin releases are discussed, with the latter estimated to have minimal price impact when spread over time. Macro trends in altcoins. Jonah predicts a significant decline in the value of most altcoins, attributing their overvaluation to the lack of substantial technological and economic promises. Bitcoin's geopolitical role. Jonah argues Bitcoin could become a significant asset for facilitating large transactions and commodities trading, especially in geoeconomically tense regions. Oil and commodities trading. The episode also delves into the future projections of crude oil markets, emphasizing the abundant slack, which stabilizes prices and blocks significant price hikes. He discusses transitions in market dynamics, spare capacity, and refining margins in relation to geopolitical situations and economic conditions. Jonah van Bourg made the following predictions: Bitcoin. Jonah foresees Bitcoin achieving greater geopolitical importance, potentially even becoming a reserve currency, as it serves as a hedge against debasement in volatile economic conditions. Altcoins. He warns of the demise of most altcoins, predicting their value will plummet significantly due to vaporware projects and lack of economic fundamentals. Oil markets. He anticipates stable crude oil prices in the near term due to significant spare capacity and the balanced economic environment, barring any unforeseen macroeconomic shocks. Jonah van Bourg concludes by emphasizing the long-term bullish potential of Bitcoin while clearly stating his skepticism about the future of most altcoins. He also highlights the importance of understanding refined product dynamics and geopolitical impacts on commodities trading. He advises a cautious yet opportunistic approach to investments in the oil markets and urges viewers to look out for signs of regulatory clarity that might change the valuation landscape of certain crypto assets. In this engaging interview from the David Lynn channel, we delve into the pressing issue of the cost of living crisis with Tomas Philipson, an esteemed economics professor and former acting chairman of Trump's Council of Economic Advisors. Philipson brings a wealth of knowledge and a clear viewpoint on the current economic climate, exploring whether American consumers are in for more economic hardship. The core thesis Tomas Philipson presents is that the cost of living crisis, while not as severe as it was during 2022 and 2023, continues to burden American consumers in 2024. Philipson argues that real income growth has stagnated or decreased, despite nominal income appearing stable, primarily due to inflation and deficit spending. He also stresses that this economic strain is amplified by inefficiencies in government policy, particularly the Inflation Reduction Act. Here are the key points discussed by Tomas Philipson. Real income and economic growth. Philipson highlights that real income, which accounts for purchasing power, has been flat or declining under Biden's administration. Stressed that real income should ideally grow at a steady rate, especially post-recession, but it hasn't due to economic mismanagement. Cost of living crisis. The cost of living crisis has led to significant declines in real wages and GDP growth. Philipson notes that inflation and government spending have directly impacted the labor market and consumer prices. Inflation Reduction Act. Philipson criticizes the Inflation Reduction Act, suggesting it has contributed to increasing inflation due to excessive government spending. He points out that drug prices have risen under Biden, contradicting the act's intended effects. Economic indicators. The price of credit has more than doubled, significantly impacting mortgage and loan payments. Housing prices have paradoxically increased due to supply constraints and high interest rates. Debt and deficit spending. Philipson explains that both household and government debt levels have surged, leading to increased financial strain. Interest payments on national debt have exceeded defense spending, posing significant budgetary challenges. Tomas Philipson made the following predictions: persistent inflation. Philipson does not forecast an upcoming recession with certainty, but suggests that inflation rates around 3% to 3.5% could persist. Economic policy impact. He predicts that tax hikes and continued high spending will further squeeze real wages and living standards unless substantial policy changes are made. Tomas Philipson concludes by underscoring the urgent need for government spending cuts to alleviate the economic strain on consumers. He advises against proposed tax hikes and advocates for policies that stimulate real wage growth. By addressing these issues, Philipson suggests that the standard of living for Americans can improve, pointing towards a more sustainable economic future. Today's video from the David Lin channel features a revealing discussion with Chris Vermeulen, Chief Market Strategist at thetechnicaltraders.com. With a deep dive into the current state and future of the real estate market, particularly in Canada and the US, this video examines whether we're on the brink of a financial crisis reminiscent of 2008. Chris Vermeulen argues that both the Canadian and US real estate markets are teetering on the edge of a significant downturn. This potential collapse is driven by skyrocketing mortgage rates and over-leveraged homeowners who may soon find themselves unable to meet their mortgage obligations, leading to a wave of foreclosures akin to the 2008 financial crisis. Here are the key points discussed by Chris Vermeulen. Housing market stress. Mortgage rates are renewing at significantly higher levels, causing financial strain on homeowners. In Canada, many mortgages are up for renewal over the next 2 years, setting the stage for a bloodbath as rates quadruple. U.S. housing construction permits have seen a decline since 2021, indicating potential market weakness. Evidence of market decline. Historically, after a pullback, investors often drive markets up briefly before a final collapse. Examples include the parallels drawn to 2006-2008, where multifamily housing starts skyrocketed before crashing. Economic indicators. Unemployment rates crossing the 24-month moving average often precede financial crises. A significant portion of Americans living paycheck to paycheck with depleted savings, increasing vulnerability. Chris Vermeulen made the following predictions. Real estate market correction. Chris predicts a substantial decline in real estate values driven by a surge in mortgage defaults and forced sales. Banks are preparing for this event, setting aside record amounts to cover bad loans. Sector-specific impacts. A focus on multifamily properties by savvy investors might cushion them slightly better, but the overall real estate market is expected to suffer greatly. Shares in real estate companies and banks may see significant drops as they handle the fallout from foreclosures and bad debts. Chris Vermeulen wraps up by re-emphasizing the looming crisis and warns real estate investors to be cautious. To navigate through what's coming, he highlights the importance of preparing for opportunities that arise from such downturns, focusing on holding on to quality properties and diversifying into more stable investments. Welcome back to the Julia LaRoche Show. Today's episode dives deep into the precarious game central banks are playing with inflation, featuring our special guest, Peter Boockvar. Boockvar centers his discussion on the dangers posed by central banks, particularly the Federal Reserve, if they prematurely ease up on their fight against inflation. Drawing lessons from the 1970s, he contends that inflation could reaccelerate if not managed properly, suggesting that Jerome Powell and other central bank leaders should proceed cautiously with any potential rate cuts. Here are the key points discussed by Peter Boockvar, Chief Investment Officer at Bleakley Financial Group and CNBC contributor Economic Landscape. The current economy is mixed and uneven with both positive and negative factors. Higher income consumers are better off than lower to middle income consumers who spend more on essentials. Housing market. New builds are needed, but are insufficient. Baby boomers need to sell their homes to free up inventory for first-time homebuyers. Existing home sales are near 30-year lows, while new builds are slightly better. Government spending and debt. Government spending boosts economic activity via healthcare, Social Security, and defense. Rising U.S. debts and deficits could pose significant problems as the market becomes more sensitive to fiscal recklessness. Labor market unemployment rates are mixed, hovering around historical lows but trending upward. Demand for labor is shrinking, while firings remain somewhat muted. Peter Boockvar, Chief Investment Officer at Bleakley Financial Group and CNBC contributor, made the following predictions. Future inflation trends. Inflation could stabilize around 3% to 4% instead of the pre-COVID levels of 1% to 2%. Post-COVID adjustments in supply chains and labor costs will impact sustained inflation rates. Federal Reserve rate cuts. Boockvar anticipates the Fed will cut rates gingerly due to lingering inflation concerns. Any rate cuts will likely have minimal impact on the economy and could lead to more complex financial dynamics, such as a bear steepener. Peter Boockvar concludes that navigating this confusing economic environment requires caution. He advises diversifying investments, particularly into sectors like energy, precious metals, and commodities, which he believes will thrive in upcoming economic conditions. Additionally, he underscores the importance of understanding global market dynamics, especially in emerging markets in Asia. Our experts provided a deep dive into the economic challenges and opportunities on the horizon. Joanne highlighted the burden of rising living costs despite strong labor markets, with wealth inequality exacerbating consumer struggles. Jonah van Bourg emphasized Bitcoin's potential as a major financial asset, contrasting sharply with the grim outlook for altcoins. Tomas Philipson pointed to systemic issues like government spending and stagnating real income, while Vermeulen warned of a potential housing market collapse reminiscent of 2008. Peter Boockvar cautioned against premature easing by central banks, which could reignite inflationary pressures. While opinions varied, the consensus is clear. Heightened vigilance and strategic investments are essential to navigating this complex economic landscape. Thanks for watching Financial News in Review for June 25th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see, drop a comment below. See you next time.